Okay, everyone. Welcome again. My name is Skip Watts. I am the 828 East, CFNC, and North Carolina 529 Regional Rep. We're here today to talk about jump-starting your college and K-12 savings with the North Carolina 529 plan. I'm going to be working today with my friend and colleague, Tequila Hall. She'll be advancing the slides for me. Tequila is going to pick up about halfway through this presentation. I'll start. Again, my name is Skip Watts. I work out in the western part of the state, roughly from Boone down to Columbus. Tequila handles the 336 area code. And if you ever have questions regarding the North Carolina 529 College Savings Plan, you can feel free to reach out to us at any time. Now, today we're going to be talking about several different topics. To start with, we're going to be discussing why a family should consider starting a 529 plan. We'll be discussing what exactly a 529 plan is, new features associated with the North Carolina 529, and then lastly, we'll be covering some frequently asked questions about 529 plans in general. Now, why should you start a 529 plan? Well, obviously, college is getting more and more expensive every year, and most families will pay at least a portion of their children's college expenses. It's much easier to cover those expenses when you plan ahead, and the earlier we can start planning proactively for those college experiences, the better. A 529 account essentially gives you savings to help start your child's future after high school. So what is a 529 plan? Well, every state in America has a 529 plan, and federal law allows states to develop these qualified tuition programs so that they can aid their residents in saving for college. 529 simply refers to the section of the Internal Revenue Code that created these programs, and every 529 plan enables participants to qualify for federal tax benefits. And in North Carolina, you also can possibly qualify for some state tax benefits as well. So we definitely encourage you to consider the North Carolina plan, because as a North Carolina resident, you can be eligible for those federal and state tax benefits. Now, North Carolina's 529 plan was created by the General Assembly back in 1996. It is established and is maintained by the North Carolina State Education Assistance Authority, and it's administered by College Foundation Incorporated. Now, it's open to any state or residents of any state. So the North Carolina 529 plan is not just for North Carolina residents. However, North Carolina residents can take advantage of some benefits that other state residents may not be able to. You're going to enroll directly through CFI, which means there's no sales fees or sales charges or anything like that. The program is really accessible. It's really affordable. It's tax-free earnings on contributions. The program is extremely flexible, which I'll discuss more in a few minutes, and it's also comprehensive. Now, when I say it's accessible, I mean the North Carolina 529 plan is available for any adult. Any adult in the state can open an account for anyone who plans to go to college, regardless of the beneficiary's age or their relationship. For example, a parent can open up a 529 plan for a newborn, a grandparent, for a grandchild, or maybe even a neighbor opening up a 529 plan for a friend. In fact, when I was in graduate school, several members of my cohort had 529 set up for themselves in effort to pay for their graduate program. It's just a really accessible and easy way to help cover those college expenses. Now, the program's also really affordable. There's no enrollment fees. There's a minimum contribution as low as $25. However, I would recommend families consider saving more than just that $25. There's low total asset fees and expenses. They range from 0.25 to 0.39%. There's no extra fees unless you request special services like courier delivery or paper bills or paper communication. Basically, there's no fees if you don't pick any of those options. And you can contribute when you want to, on occasion or regularly, and however you want to. If you want to do it in a lump sum, or if you want to contribute through an automatic draft, all of those options are available. Now, when I say lump sum contributions, that could be a personal check, that could be an electronic funds transfer, an EFT, that could be a money order, and it could also be a transfer or a rollover from another college savings account. That could be another state 529, that could be a Coverdale education savings account, or it could be a qualified savings bond. At any rate, you can roll those programs over into your North Carolina 529 plan if you so choose. Now, there's automatic contributions with the North Carolina 529 plan. You can do reoccurring drafts. That could happen once or twice a month on the dates you select, but you could also do payroll deduction. If you work for an employer that offers the North Carolina 529 plan as a benefit, yeah, that payroll deduction is an option. And I think that's a really good option because at that point, you don't necessarily see the money coming out of your check. And so it's a really effective way of saving without even thinking about it. But before you can do that, your employer must be set up with the North Carolina 529 plan to transfer employee contributions. And the employee must have a payroll deduction authorization agreement on file with the North Carolina 529. All of that can be found on cfnc.org in the Save for College side of the website. Now, the program's tax-free, so any earnings that you may receive in your 529 plan, well, they're free from any federal or North Carolina income taxes when they're used to pay for qualified higher education expenses. Out-of-state residents pay no federal income taxes on federal account earnings used for qualified higher education expenses, but they should check with a tax advisor regarding their state taxes. But again, just to reiterate, if you're a North Carolina resident and you're participating in the North Carolina 529 College Savings Plan, you're free from any income taxes through the state of North Carolina, as long as you use that funding for qualified higher education expenses. Now, the program's super flexible as well. Your savings can be used for a beneficiary's college costs at virtually any eligible institution anywhere. Okay, so they don't have to go to college in North Carolina. They could go to college really anywhere in the world. As long as it's accredited program, you can use 529 plan funds for that. You can change future contributions at any time. So if you want to in the future maybe add a little bit to your contributions because maybe your student's getting closer to college, you can do that. At any time, you can change those contributions. You can reallocate current funds twice a year, each calendar year. So if you don't like the way your investment vehicle is working for you, you can change that a couple times a year. And you can also use for student loan repayments, which is kind of a new program. You can pay up to $10,000 per beneficiary for their student loan repayment. And you can also use 529 funds for apprenticeship programs, which is new. And it's very valuable for students that aren't necessarily participating in a four-year college track, but still want to have some education after high school. Now, as far as K through 12 tuition, parents can pay as of January 1st, 2018 for their qualified tuition at a K through 12 school. So if your students go into a private school, you can pay up to $10,000 per beneficiary per calendar year through your K-12 or through your North Carolina 529 plan. This is a new thing, and it's very important that those families that have students in private school settings are aware of it. Now, the Secure Act is something that was signed into law back in, I think, 2019. Yeah, in December of 2019. And essentially, the Secure Act allows 529 participants to use those funds to pay for student loans. They can pay up to $10,000 for the 529 beneficiary and up to $10,000 for each of the 529 beneficiary siblings. This is a new program. It just was initiated a couple years ago. And I think it's important because unfortunately, a lot of people accrue student loan balances. And this allows us to use our college savings to pay back those student loans if we so choose. Now, the Secure Act, again, has opened up 529 funds to be used for apprenticeship programs. I think this is a really important point to point out because a lot of students aren't going necessarily to a four-year college, but instead they might be looking at a lineman's program or something like that. 529 funds can be used for apprenticeships now. Okay, the apprenticeship must be registered with the Department of Labor, and you can find all the registered apprenticeship programs at apprenticeship.gov. Any distribution taken after December 31st, 2018 can be used for those apprenticeship programs. Now, the program is also really comprehensive. When I say it's comprehensive, I'm going to turn it over to my friend Tequila, and she's going to cover a little bit more and talk about how comprehensive the North Carolina 529 plan is. Take it away, Tequila.
Thank you so much, Skip. So we're going to talk about the plan being comprehensive. And so that means you select investments that meet your objectives. So hopefully you have some goals as we think about saving for educational expenses. You also want to keep in mind the time frame remaining until your beneficiary will need the money for college. And as we're talking about this, think about what your risk tolerance is. So I know that some people are very conservative when it comes to investing. Other people might be moderate, some may be very aggressive. So think about your risk tolerance as we're having our conversation today. And so you can choose, one or more of the following options I'm going to talk to you about. You can diversify your portfolio for sure. All right. So we're going to talk about the federally insured deposit account, and this is offered by State Employees Credit Union. And I just want to start off by saying that it's available to members as well as non-members of State Employee Credit Union. So you don't have to be a member to participate. But this is a really good investment option that's available to you. It is one of the most conservative investment options that we make available. And it does seek to provide income plus protection of principal and earning through the federal deposit insurance. Now, I also want to make sure that you're aware that the principal that is contributed and the interest that's earned is guaranteed by the State Employee Credit Union. It's also insured by the National Credit Union Administration. And so, again, I just want to let you know this is the only guaranteed option that is available. So we're going to talk about a few other options that you have available. Hopefully you've heard of Vanguard. Vanguard has been around for quite some time. It's one of the world's oldest investment companies. And of course, we're going to talk about three Vanguard age-based investment options. So you can choose the track that fits your risk tolerance. We talked a little bit about risk tolerance in the previous slide. And you want to select the track that's going to be best for you. So of course, we're going to look at your beneficiary's age to determine placement within the track that you choose. So there is an aggressive track, there's a moderate track, as well as a conservative track. Now, I always like to use examples. So, of course, you can start an account as early as so when there's a newborn, all the way up to 19 or older. So if you're someone today, and let's say that you have a child between newborn and 4 years old, of course, if you're thinking that the track best for you would be aggressive, then that would be the Vanguard Aggressive Growth Portfolio, and that would be 100% stock. If you were thinking more of being moderate with your investment, then of course the moderate track will give you the Vanguard 87.5% stock and 12.5% bond portfolio. And then again, there's also the conservative track to consider. There's the Vanguard 62.5% stock and 37.5% bond portfolio. Now, you might be, thinking to save for someone who is a little bit, older. And so if you're looking at maybe perhaps a student between the ages of 13 and 14, there is the aggressive track, the Vanguard Moderate Growth Portfolio. That's 50% stock and 50% bond. We also have the moderate track, the Vanguard Conservative Growth Portfolio, 25% stock and 75% bond. And that's the moderate track. So last but certainly not least, we have the conservative track. And here we're looking at the Vanguard Income Portfolio, which gives us 75% bond and 25% short-term reserve. So I encourage you to take a look at this investment option chart, look at the different investments, look at the beneficiary that you're trying to save for, and what track is going to be the best fit for you. So we're going to move right along. We also have some individual investment options that are available through Vanguard. And so as we're looking at the individual portfolios, some of these should look familiar because we did see them in the previous slide when we were talking about the age-based products. And so there's about 9 or 10 of them that you can select. And remember, as we're talking about your investment options, you can diversify your portfolio. You don't have to have all your eggs in one basket. So here you'll see the individual portfolios and again, what they seek to do or a description. So you'll see the Vanguard Aggressive Growth Portfolio. So that seeks to provide capital appreciation. We have the Vanguard Moderate Growth Portfolio. It seeks the growth of capital and current income. If you're looking at the Vanguard Income Portfolio, it seeks current income. So you can see all of them have something different that they seek to do. I just want to just mention a few of the other ones too. So there's about 4 or 5 more here on this slide. And again, you can definitely see which ones are going to be the best fit for you and what you're seeking to do as far as your goals. Now, one of the things that we cannot do as we're talking about investment options, we cannot tell you which ones to choose. So it does have to be a personal or individual decision, or we recommend that you talk to a financial advisor or fee only planner. Now, just want to kind of review some of the things that my colleague said and then mention or bring into the conversation a few other things. So he talked about who could contribute, and of course, anyone can contribute. So you could be a parent, grandparent, aunt, uncle, friend of the family, godparent. Have lots of grandparents who do contribute to 529 plans. You can also use this to save for yourself. Now, as we think about the annual contributions, the maximum total allowable right now is $500,000. And I know that looks like a big number, but we look at the most expensive colleges and universities in the country. So at least 4 years of undergraduate study and perhaps 2 years of a graduate program. Now, this amount is reviewed annually. So at the beginning of each calendar year, we look at, if the IRS has changed that amount. And sometimes it may even stay the same. Now, you may be thinking, who is in control of these accounts? So, of course, we refer to the account owner as the participant. So, whoever establishes the account is in control of the account, meaning that the beneficiary cannot just take the funds and use it any way that they decide to. Now, as we think about the age of the beneficiary for contribution, that could be any age when they're ready to start their program or go off to school. Now, taxes on qualified withdrawals, Skip talked about that. So I just want to remind you there are no federal or North Carolina income taxes if the money is used for qualified educational expenses. And again, just to recap, we're talking about tuition, fees, room and board, books, supplies, other equipment. And then again, timing of withdrawals is whenever the beneficiary goes off to school or college. Now, income restrictions, there are no AGI limits. I want to talk to you a little bit about another program that's administered by the North Carolina State Treasurer's Office. And we've been talking about just, general 529 programs, but the State Treasurer's Office administers a program that we call a 529A. And basically what a 529A does is it allows people who may have disabilities to save, or maybe their family members, their friends, or others to contribute. And while the 529 plan we've been talking about thus far is just solely for educational expenses, the 529A does allow individuals to save for educational expenses, but also allows individuals that may have a disability to save for other qualified expenses that may not be covered by Medicaid. Now, if you want to learn a little bit more about the 529A account, you can go to www.nc.savewithable.com. So again, that web address is www.nc.savewithable.com. Now, participants can also roll money from the regular or general 529 account into an ABLE account or the 529A account. And rollovers are limited though. They're limited to $15,000 per calendar year. Now we have a savings calculator. So I know you're trying to figure out, how much do I want to save? How much should I save? How much am I going to save? Because we're going to be proactive and we know that we want to save for future educational costs. So we have an amazing calculator that's available online. And this is where you can do your scratch work or your planning to say, this is the student I want to save for. I have an idea. I want to save for a 2-year school or 4-year, maybe it's a in-state or out-of-state institution. This is how much I want to save. I can save at least $25 a month, or, if you're wanting to contribute more frequently than that, you can put in how much you plan to contribute. And the calculator will tell you exactly how much you will have saved when you're ready to withdraw the funds. Another way to use the calculator is to just put in all the information and let it tell you how much it will cost. And then it will tell you if you're trying to save for everything, how much you'll need to save. But right now, we don't know if the person that you're saving for will get scholarships or grants. That's unknown to us. But what we do know is that we want to plan ahead. And when we plan ahead, that allows us to be more comfortable when it gets to that time and not stressed about how we're going to pay. And so this can just be a piece of the pie. So if you're not able to save for every single penny, just let it be a part of what your financial strategy for savings is. So what is your college saving strategy? So we want to think about that. And so this can just be a part of it, or your financial planning strategy. Let this just be a part of what you're planning to do. Now, you don't have to save by yourself. You have friends, loved ones, parents, grandparents, aunts, uncles for your children who want to, sometimes contribute because there's some kind of special occasion. There's a birthday, it's Christmas, graduation time, and they may not want to buy something tangible, but they can give the gift of education, which is priceless and it will last for a lifetime. So we do have these gift cards on our website. Please let your family and friends know about it, and they can help you save for your educational expenses. Now, some of the frequently asked questions that we have, and I just want to remind you, as you're having questions, please place those in the chat for us, and we're going to do a formal Q&A at the end, but Skip and I are going to kind of tag team, and we're going to talk about some of the frequently asked questions that we already know that people may be thinking of as we're having the conversation today. But I'm going to kick it off, and I'm going to just talk about a few of them. So how are 529 plans reported on the FAFSA? So for those of you that may not be familiar with FAFSA, FAFSA stands for the Free Application for Federal Student Aid. So 529 funds may be considered on the FAFSA, as an investment or asset. So of course, when we're talking about that, it could be treated differently depending on who owns it. So of course, it may be a parent or a grandparent who owns it. It can be a student. So anyone 18 or older can establish an account. So I just want to make sure that you're aware of that. So it may be considered as an investment or asset on the FAFSA application. Now, how do 529 plans impact financial aid? So if the 529 plan is owned by the student or parents, it does reduce need-based aid by a maximum of 5.64% of the total asset value. If it's owned by an independent student, it reduces need-based aid by a maximum of 20% of the asset value. Now, sometimes it is owned by a grandparent or someone else. So it's not counted as an asset on the FAFSA. But when those funds are withdrawn from the account, it does count as untaxed income for the student for the following FAFSA filing year. And so that may reduce need-based aid by 50% of the withdrawal amount. So what's new with NC 529? We do now have a brand new virtual assistant. We call our virtual assistant Penny. So as you consider setting up an account or as you're going through the enrollment process, Penny is available to help guide you through that process and help you with questions that you might have about the plan. So make sure you check out Penny. We also want you to know that this is National College Savings Month. So we've been having a contest all month long. So I hope you have heard about it. If you've been on our social media sites, maybe if you're working for a company, maybe your employer has let you know about it. But we do want you to have a chance to win $1,000 for educational expenses. So today is the last day. Let me say that again. Today is the last day to get your entries in. So if you're opening up a new account, that does count as an entry. If you already have an account and you're increasing your contribution, that can count as an entry. If you're changing maybe to payroll deduction, if others are contributing to the 529, so let's get those entries in. And so one lucky winner will have $1,000 added to their NC 529 account. And I want to say that could be you. All right. Now, after today, we don't want you to forget about what's happening with the NC 529 savings plan. So we want you to stay connected with us, or I like to say stay in the know. So you can get 529 news hot off the press by signing up for our newsletter. So you'll see the bit.ly link right here on my screen. So you can sign up for our newsletter. If you're on our main website, at the bottom of the page, you'll also see where you can sign up for our newsletter. So we do have our college access newsletter. We have our savings and investment newsletters. We have various newsletters that you can sign up for. Now, we're so excited that you're able to join us for this webinar, but we want to remind you that for College Foundation, we do have many webinars that will be happening throughout the fall, spring, summer, winter, all the seasons. But we do have statewide webinars that we make available. And of course, you may have someone who is closer to college. So one of the events that we're having for families that have seniors in high school is our NC Countdown to College event. It is an annual campaign that we do every single year. So if your student is not ready for college yet, just want to remind you, this is a service that we offer. So there are 3 things that we're going to be helping high school seniors with during the month of October. We're going to help them with their residency determination so they can get in-state tuition and be considered for state grants. And we also will be helping them with the FAFSA, the free application for federal student aid. We will also be helping them with applications for admission. So, of course, the week of October 18th through the 22nd, if your student is a senior or if you know a senior, October 18th through the 22nd is an opportunity for them to get their application fees waived for certain North Carolina schools by doing their application for admission through CFNC. So, to learn about this event and other upcoming events that we have, you can always go to cfnc.org/events. So cfnc.org/events. Now, setting up an account is really easy. You can go directly to cfnc.org/NC529. Again, cfnc.org/NC529. Of course, we'll help you with the enrollment process. You can find out account information. There are account maintenance forms available here. We have a lot of frequently asked questions or FAQs, the savings calculator that we just talked about. You can access that. And then we do have representatives available to help you get your questions answered. So Monday through Thursday, 8 to 8, and Friday, 8 to 5 p.m. We also invite you to call our toll-free number, which is free to you guys, 800-600-3453. So again, 800-600-3453. And our representatives are available to help answer any questions that you have. Now, I will tell you that saving or investing in someone's education is easier than you think. We encourage you, we invite you to start your enrollment today. Now, for more information after today, I want to remind you, you can go online, cfnc.org/NC529. You can email us at any time, savings@cfnc.org. Again, our toll-free numbers there. Stay connected with us. We have Facebook, Twitter, Instagram, as well as YouTube. So I'm going to stop here. We're going to sweep our chat box to see if we have any questions. And I'm also going to turn it back over to my colleague Skip to see what other things that we might want to share today.
Well, thank you, Tequila. Great job. You covered a lot of excellent material. I want to reemphasize that if you want to stay connected with us in the future, definitely follow our social media accounts. We all have, as regional reps, individual Facebook and Instagram and LinkedIn. And I, for one, really make an effort to post college savings information and news in my Facebook and LinkedIn pages. So check us out there. And then our YouTube page has a plethora of videos. If you want to just kind of review how you get an account started, there's information with that in mind. There's information about how to pay for college, how to find scholarships. Pretty much everything with regards to the college access process will be located in our YouTube channel. Now, we've opened up our chat box for questions, and I'm not seeing any so far in the chat box. Tequila, do you see any on your end?
Let's see, I'm looking, Skip.
And let me also encourage attendees to voice their questions vocally if they so choose. You can unmute yourself. And
okay, I have one question that I'm seeing, and I think it's a good question. I want to read it out for the whole group. And Skip, if you don't mind answering this question. So what happens if your child decides not to attend a college or any type of apprenticeship program, or if you don't want to use it for any purpose? What happens to the funds then?
I get that question a lot, Tequila. I tell families that they can roll those funds over to another student if they so choose. So if your oldest son, Johnny, doesn't want to go to college, but maybe your daughter, Sally, has those dreams of aspiring towards a college application, you can roll Johnny's funds into Sally's account. You can also withdraw those funds and use them for non-education related expenses, but there is a penalty associated with withdrawing them for non-education related expenses. So I tell most families just to roll that money over into another family member's account that is certain they're going to college.
All right. And then I want to also remind you guys, I don't know if anybody has asked this in the chat or if we said this, but this can be just a piece of your financial strategy. So you can save just a little bit for tuition. You might save a little bit just for, books, supplies. Perhaps your student needs a computer. So, it may sound small just thinking about, a computer, but let me tell you, kids are using laptops for everything now. And so it could be that your student needs a new one to go off to college, or if you're the person in school, maybe you need it for yourself. So what happens if the student gets a scholarship? You can withdraw up to the amount of the scholarship without penalty. So we get, that question.
Yeah, so just
Don't
to repeat that, Tequila, I get that question a ton. If you have a 529 account set up and your student is lucky enough or graced with a scholarship, you can remove that funding without any um, without any blowback up to the amount of the scholarship. So if your son receives a $10,000 scholarship, you can take $10,000 out of your 529 account without any additional fees or anything tacked onto it. That's a really good point, Tequila.
absolutely. And sometimes we get questions about, what if my student lives off campus? Can the money be used for an apartment? Absolutely. So it can be used for off-campus housing. And so, of course, what we encourage you to do is to keep a copy of your leasing agreement, because if you're ever audited, you have to be able to prove that the money was used for educational expenses. And
Here's,
so,
I got one here. How are losses handled under the North Carolina 529 regarding taxes? So I'm thinking that question might, I'm not 100% sure what we mean here, but I think that might be if your investment strategy actually comes up in the negative. Um, is that how you're reading that, Tequila?
let's see.
Okay.
Yes,
So,
yes.
so if you're in a Vanguard investment plan that has actually negative earnings, you're not going to have to report those, obviously. So that's how it would be handled. Tequila, would you like any insight on that?
I also want to remind individuals that, one of the things that we're not able to do is advise you. So, of course, if you want advice, if you want to make some adjustments to your investments, we do recommend that you talk to a financial advisor or a fee-only planner. The other thing that you can do, and I know that lots of people do, is remember, I think it was during Skip's part, that you can make changes to your investments. So money that we have already received, of course, you can only move that 2 times per calendar year. So that means that you have already allocated funds into a certain investment. But money that we have not yet received, if you're looking at your investment and you see that you want to do something different, you can reallocate future funds at any time. So meaning we haven't received that money yet, but you want to invest it differently. So we can look at it that way as well. So I know as you look at other things that you're doing as far as investing, that's something that you can certainly use as a strategy. So I'm looking to see if we have other questions in the chat. Skip, are you seeing other questions in the chat?
I'm not.
Okay. And so I'm trying to think. I mean, we also get questions. Can I use this to buy a car? You can't use it to buy a car. You can't use it to buy a boat. But it does have to be those qualified educational expenses that we mentioned. But I will tell you, if there's ever a time that you have questions about how the funds can be used, or if you're concerned if it's a qualified expense, then you can always contact our office. Now, of course, when it's time for you to withdraw the funds, actually, we do have an upcoming webinar, Skip, in the month of November, where we're talking about, 529 rules, how to use the funds that you've saved. So we're going to help you when you get to that point. But of course, we also get a question, what happens, if I get the bill and I pay from a different account? You can do that. And then basically just, when we're asking where the funds should be sent, you can be reimbursed from your account. Typically, when you do withdrawals, we send a check co-payable to the institution and the student, it goes to the business office. So, so there's all kinds of things that we can do. But our 529 rules presentation for November, I'm sorry, I did not update the slide, but I think it's already on our website. And so, but we are going to, we offer that particular presentation a couple times a year. And, if you're closer to the time where you need the funds, that's a whole nother presentation where we'll be talking about your qualified withdrawals and how to utilize your funds when it's time to pull them out.
Okay, I got another question coming through, Tequila. When using the college savings calculator, is it able to give you an estimate of the funds you would save by using the North Carolina 529 plan? No, it will not, Kaylin. And that's the reason being is, well, first of all, college prices vary a lot and it depends on what your investment strategy is. And there's no way really of showing how much you would save to my knowledge. Tequila, could you answer that better?
All right, let me just recap. Um,
So when using the savings calculator, is it able to give you an estimate of the funds you would save by using the North Carolina 529 plan?
it will tell you, the way that I'm reading it is it will tell you when you're putting the money in, it's going to give you an opportunity to put various interest rates in. And so it's a estimate of how much, based upon the information that you input, how much you will have saved, over time. So it's not, it's not going to go in detail about like if you use the federally insured deposit, investment, or if you use, this particular one in Vanguard, it's not going to get that detailed. So it's going to allow you to put the amount that you want to save, however frequently you plan to do that. You can indicate interest rates. You can let us know about the type of college you're saving for, whether it's a 2-year, 4-year, public, private, in-state, or out of state. And then we're going to give you, an estimate, because like Skip mentioned, college costs change, the rates could change, things of that nature, but it's just to give you some guidance as to, what you could have available at that time. And then of course, as your saving strategy changes, then of course that could change things too. But just want to make sure that that is a tool that is available to give you some guidance.
That's perfect, Keela. Thank you so much. Going to open it up for any further questions, either by voice or through text.
Okay, I'm going to check the box to see if I see anything, Skip, anything in the chat, and make sure we haven't missed anyone. We definitely don't want to miss anyone's questions. So let me just take one more quick look. All right. I don't think I see anything else, Skip, but also want to let you or remind you that you can, use this savings plan, have it drafted from a checking or savings account. And if your employer offers payroll deduction, that's another option. You can do it through payroll deduction. If your employer does not currently make payroll deduction, if your employer does not currently make payroll deduction available to you, they can always contact our office. It does not cost your employer anything to offer this to you. It is free for an employer to set up payroll deduction for, this with us. So just keep that in mind as well. But Skip, I don't have anything else. Do you have any other information that you think we missed or should share?
I think we've covered it all, Tequila. Thank you for everybody that attended. Please don't hesitate to relay any questions in the future to any of the outlets that we've identified today. We want to make sure you're comfortable with the program and feel confident in investing. So thank you very much for your time, attention. We're going to go ahead and shut the recording off and hopefully see you in the 529 account.
All right. Thank you guys. Have a wonderful day.